So in college and school, I had a grade point average where all my grades were A's or B's. And that's what allowed me to get to graduate school and be successful academically. So I never had a quote unquote failure. In trading, I have many failures. There are many losing trades. And if you can't accept it and use it constructively, it can really tear you down.
So as you know, I talk a lot about trading psychology and mindset in trading. It's a topic that I like to talk about, I like to hear about, I like to learn more about all the time. But I don't consider myself to be an expert at that topic. I've not studied psychology in the past. I work with some coaches for sure, but I've not really been that much into the topic of psychology in terms of studying and understanding how the mind works. So I came across this video a few days ago of Brett Steenbarger. It's a trading psychologist that I really admire, and I read a few of his books before that you can check out over here. And Brett did an interview with SMB Capital. Again, a really good prop firm based in the US, New York. They are funding traders. They are a really big prop firm funded by Mike Bellafiore, which I also interviewed in the past over here. You can check out this interview for sure after this video is done. And I thought I would react to the video, give you my thoughts on it, what I think, add my few points to it. And you'll get to learn some things about trading psychology from one of the best psychologists out there, plus hear my thoughts on that topic. And the video is called Trader Psychology. Every elite trader has these 6 qualities with Dr. Brett Steenbarger. Play the video and react to it as we go forward.
Okay, so today I'm going to be chatting with one of the greatest and most renowned trading psychologists in the world, Dr. Brett Steenbarger, about what his research shows are the 5 common characteristics and behaviors of the world's most talented traders. Dr. Steenbarger has worked with traders employed by the world's largest hedge funds, so he's in a unique position to understand and research these issues. And in this video, he's going to be presenting the findings of his research.
Okay, so just a quick intro here about Brett Steenbarger and the SMB Capital prop firm. Just want to play this so that you know what it's about and you know that Brett is someone legit, someone that I really admire myself. I'm just going to skip ahead to the introduction and we'll go straight to the points that are important for us to understand in this video. Here we go.
To each of the 6 characteristics that you found in common with the world's greatest traders. Now, the first one you found was that all great traders have a capacity for sustained focus. Now, that's an interesting one that I don't think I would have at all intuitively guessed. Can you tell us more about what you learned about the importance of this trait to great trader success, and maybe an example or two of what exactly you mean by this trait?
Yes, and it really means 2 different things, Seth. What we found cognitively was that great traders are either greatly fast thinkers or greatly deep thinkers. And it's a little bit like Daniel Kahneman's idea of thinking fast and slow, the book that he wrote on that topic. And to think fast means rapid pattern recognition. It means looking at things broadly and seeing many different things at one time and seeing the pattern to those. Thinking deeply means that you're gathering a great deal of information, doing a great deal of research, and understanding something in more depth than the average market participant. Both of those require sustained concentration. They are different cognitive functions, thinking fast and thinking deeply, but both require that we sustain attention to find the patterns and to dig in research to generate conclusions.
Now, the 2 categories, the fast thinkers and the deep thinkers, are they mutually exclusive, or do some people possess both deep and fast thinking?
There are people with strengths in both areas. I would say it's the exception, and usually a person is stronger at one than the other. But there are, for instance, portfolio managers who think deeply and generate big picture ideas, but then can trade those on shorter time frames based on flows within trading instruments.
Well, this is a really good point. So I'm really glad that you mentioned this. This is a really good point that I think it's not talked about much in trading psychology ever. So you can think fast, you can find patterns, you can spot these really quickly in the market, you can scalp or day trade the market, or you can think deep. And that would mean that you are able to think more about the bigger picture view of things. You're able to see the patterns that are coming up. You're able to think about what could happen in the future. This is a good point. Now, I think that people think less these days, and that's a big problem. Like, people are using strategies out there online for free. You can just research those on YouTube, find strategies really fast, and you're not really thinking anymore. You're just like kind of copying other people, copying strategies, or kind of copying setup you see online. And I think that thinking part is kind of lacking these days. So that's really good advice, and I hope you can take away from this. Okay, so here's the second quality.
Identified among all great traders, and that is originality and creativity. It's an interesting one. I'd really like you to share, if you can, some examples of the originality that you've seen exemplified by great traders and exactly why you think it may be so critical to success. In other words, what about this quality lends itself to great trading success?
Okay, yeah, it's very, very important. If you look at the same things as other traders, you'll tend to do the same things as other traders, and you'll tend to get the same results as other traders. It's hard to have distinctive results when you're not doing anything distinctive in a process sense. And what we find with very successful portfolio managers, very successful traders, is that they are either looking at different information than others, or they're looking at the same information differently.
That's a really good point. Again, it comes back to what I was saying before regarding the copying strategies of other people. I've had a hard time with this before because I used to copy other people. I used to do exactly what they said, what they did. I would research like how to draw support resistance areas on YouTube. I would do it the same way people did it on YouTube, but I wouldn't get the results I wanted in trading. I would get like really bad results. I had to switch it up a little bit around, do things a bit different than what people were doing online, and that seemed to work better for me. So you can look at the same concept as other people, but in a different manner that work with your personality, your style, and you will trade better. You'll have better results. So that's a really good point, right? You either look at the same thing in a different manner, or you look at different things from other people. Again, not taught in books, not taught in YouTube videos ever, so I really like this principle. This is amazing. So let's just watch a few more seconds of it and then go to the next point after.
And so there's a uniqueness to their perception, there's a uniqueness to their research. They're not playing the same game as other consensus traders. And that is a big part of their success. And in fact, a big part of their longevity is that they are able to find new sources of unique edge in their trading that others don't participate in. So an example of this kind of uniqueness, there was a firm that I came across that they had access to the information from satellites in the atmosphere. And the satellites could recognize different ships on the oceans and in ports, and could recognize what types of ships those were, and could download that information so that at any time you had real-time information about how many ships were actively shipping, how many were stuck in port, how many were oil tankers, how many were cargo ships of another type. And they could actually forecast economic activity based on the shipping activity.
Wow.
That was, unique data, and clearly looking at something other people weren't. That's a dramatic example of someone doing something unique.
Yeah, this is really good again, and that's why you need to spend some time on your own, doing your own research. Like, instead of copying other people's strategies, why not just go in the market and find what works? Find things that you spot yourself and decide how you can trade those and find out ways to trade those. You don't need YouTube. You don't need anywhere else to find information or strategies to trade. It might be tougher to look at it yourself, right? But definitely more rewarding after. And you're probably going to get better results than people who follow these concepts you hear about everywhere online, like the support resistance areas, the zones in terms of like, oh, buy when it's breaking out, or buy at the pullback after the breakout. A lot of the good people you see online who teach good stuff and really important stuff are people who learn either like one time from a mentor and made the lessons their own, like put into practice in their own terms, how they like it, or people who just from scratch study the market and find what works and do it after. And I think that's a really big difference. So really good point, and we'll go into the next point right after. Okay, so the third quality here of elite traders.
The third quality that you picked up on is that the world's greatest traders have all been willing to and have in fact learned from mentors and other great traders. That's really very interesting because
Exactly what I said before.
some
Interesting.
people might think that the world's greatest traders are cocky, brilliant guys who were just born that way and didn't have to be humble and accept that someone else may actually know a little bit more than they do. But apparently that's not the case, is it, Dr. S? So why then is having worked with a mentor, or as you have said in some cases multiple members, so consistently present in great traders? I mean, are there any guys who just become great without having worked with anyone at all?
What we see in every performance field is that mentoring is the dominant path to success.
Wow.
So let's think about someone who becomes an Olympic professional. Are they really going to train and work out at home by themselves and suddenly enter the Olympics? I don't think so. Let's talk about chess champions. How do they learn? How do they grow? Well, they belong to chess clubs and they receive mentoring from chess masters and grandmasters. Look at the development of artists in art studios. Do they just start painting by themselves with no external input? No, they learn from the masters. So it's across fields. As you know, I teach in a medical school. And in medicine, what do? You take courses, but you follow different physicians, you observe what they do, you learn what they do, you do different rotations, and so you have many mentors who show you firsthand the how-tos.
Now, this is a really good point, but that aspect of like getting a mentor and learning from other people is too often used to a bad way, where people want to sell you a course. They say, oh, you got to learn from a mentor, so here's my course, buy my course here. That's really bad. So I think there's a lot of truth in what Dr. Brett says here. This really makes sense and it's a good point, but there's a big difference between learning from like a course online that you take with someone teaching you a strategy, or learning actually from someone in real life and with like a real person, or even like online, but learning from someone directly. So I found a lot more value myself in coaching and like one-on-one support compared to courses. Courses are good, right? But I deliver it with a lot of support. And I make sure people feel supported. I do calls with them all the time. We go on like one-on-one sessions. We go on mastermind calls as a group. I do things that make a bigger difference. And I think it's really important. So I've only been able to learn myself from mentors and coaches, not really for courses in terms of trading. Anytime I take a course, I'm like, oh, it's good, but something's missing. I cannot really implement it that much. So having a coach, having someone to talk to, or even like a group of good traders who hang out around, can make a big difference. So I've seen a lot more difference with this compared to a simple course online or something. So if someone says again that argument of you got to surround yourself with mentors and coaches, but then they sell you a course, I think it doesn't make any sense, but that's good advice. So again, good advice from Dr. Brett Steenbarger here. And now we go on to the point number 4. Let me just go ahead. I really recommend, by the way, you watch this completely. So if you want, I'll put the link below. And I recommend you watch the whole thing on your own time, because that's really good. I just don't want to make it a long video here for you. But okay, so here we have quality number 4.
The fourth quality that was consistent among all great traders was what you called emotional resilience. Now, I'm a huge pro football fan, and I know that if you play cornerback and a receiver beats you badly for a big gain, they say the great cornerbacks are able to just erase their memory of the play and get back and do a great job defending the next pass that comes his way. Is there a similar analogy in trading? Is that what you mean, or is it more nuanced than that?
It's a little more nuanced than that, Seth, because you're not erasing the memory of it. You want to remember, let's say a bad trade, a trade that goes wrong. You want to remember it because you want to learn from it.
Right.
And what gives you the resilience is that you're treating losses as learning experiences. In that sense, you're embracing the losses. Now that, of course, presumes reasonable risk management, okay? But if you are making a good bet, betting this amount to make this amount, and it goes wrong, you can try to identify what might I have done differently, what did I miss? And so now the loss is not so threatening. It's there to make you better. Resilience helps us traverse our learning curves. We're going to make mistakes, and even the best traders are often wrong close to 50% of the time. We want to use losses to make us better, not to tear us down.
I see. So that emotional resilience is, it sounds to me like a critical element of success. I mean, I know traders who probably could have been very successful, but they just could not handle losses. And
Right.
they would get so overly depressed, they'd bail out, come back to trading a few months later, experience some success, have another serious loss, bail out again, and there was no consistency to their trading. Those periods where they had bailed out, they could easily have been successful,
Right.
but they never gave themselves that opportunity because of the lack of emotional resilience.
Yes, it is very difficult for someone who has succeeded consistently in other areas of their life to enter a performance arena where you're going to be wrong 50% or more of the time.
That's why you see, by the way, a lot of business owners, people who've been doing really well in the past, who get into trading and then have a hard time with it because they're used to making a lot of profits. They're used to being able to make decisions and make money right away. Like they make money on all the transactions, all their deals, and they get to trading, then they lose money right away. So that's why you got to be able to get back on track really fast. I talk a lot about this in the past in videos where you got to have a get back up ritual. How do you get back on track when you have a tough time? How do you make sure that you are able to recover quickly? Because sometimes we have even like a really good period, then we want to stop trading for a while because we feel good about ourselves. But again, you got to be able to go through the tough times. You got to be able to go in the market no matter what, because that's how you're going to be able to sustain your progress. And even when you have a tough time, you got to be able to get back on track because you cannot just kind of stay there and quit, for sure. Find yourself a get back up ritual, a way to get back on track. And if you're not experienced with it yet, find someone who is trading full time and ask them how they get back on track. I've had a lot of success with this, where I asked my friends, my trader friends, how they're able to get back on track when they have a tough time. They told me that, first of all, it's hanging out with people who are like them, who trade full time, and being able to see things in a better perspective. Some people have music that helps them get back on track. Some people talk with some friends. Some other people are gonna maybe read a book or look back at their goals to get back in the zone. That's, again, a really good point.
So in college and school, I had a grade point average where all my grades were A's or B's. And that's what allowed me to get to graduate school and be successful academically. So I never had a quote unquote failure. In trading, I have many failures. There are many losing trades. And if you can't accept it and use it constructively, it can really tear you down.
That's
Again, good point. What can you learn from your mistakes in trading, or what can you learn from your bad trades? There's always something to learn, always something you can look on, and you can always write down your mistakes, review your mistakes later, find out what mistakes are common, what mistakes you keep doing again and again, and try to work on those. Again, a good point for sure. Okay, let's go to quality number 5.
your research was attention to detail. Now, that's one of those blocking and tackling traits, as you've said, that may not be the most fascinating quality that you picked up on in your research, but apparently you nonetheless identified this as a common trait that all great traders had. So how does this trait of attention to detail manifest exactly in great traders, and why do you think that it's so critically important?
When we look at the results of traders, their profitability, it turns out that only a modest fraction of the success comes from the actual ideas that they're trading. The ideas are important, but they're not all important. Once you have the idea, you still have to structure that idea as a good risk-reward proposition to turn it into a trade. And that's a very detailed area of exploration. So if I have an idea that the global economy is growing, that there's going to be economic expansion overseas, that will carry over to certain international companies in the US, great, that's a worthwhile idea, but where do I buy? Where would I sell? How would I structure that trade? Would I think about using options and limiting the amount of premium that I dedicate to the idea? Might I structure it as a spread trade or a relative value trade? I'll buy this industry and sell another industry against it. There's so many different ways of structuring an idea, so many different ways of timing and sizing an idea. Those are the mechanics of trading, and they account for a surprisingly large degree of success or failure of traders.
It reminds
Yeah, this is a good point. Although I'm not so sure about it for a simple reason that I know plenty of traders who don't pay attention to details in terms of like their own life. They have many things that are like falling apart everywhere. Things are not that great, but in trading they perform really, really well. They have this really kind of good quality of being good traders, and so I'm not sure the attention to detail here is the right word for it. I definitely understand the point, though. The point is like you gotta be able to precise things you hear, make it into like a proper idea for trading. That definitely works. So it's like a way to reformulate things as you see and put them into trading in a good perspective. But that's again a good point. It's just that you might have a good attention to details in trading, but not elsewhere in your life. And I think it's not like a general trait, but it definitely works well in trading. Good point again.
Reminds me of the expression that success is 1% inspiration and 99% perspiration, right? Is it something along those lines?
Exactly, exactly. And so you can come up with a brilliant idea for the design of an automobile, and that's great. But if you don't have the detail work to create an efficient engine and to create a beautiful interior that's well constructed, then that car is not going to be a commercial.
Yeah, so it's more like practicality, right? They're able to implement what they hear, or they're able to implement the ideas into proper trading material where they can actually implement it and use it for trading. So that's more what I would say, but it's definitely a good point. Okay, let's go on to the quality number 6.
And finally, the sixth trait that you notice that all great traders have is that they're always working to improve their game. Now, having been at SMB for many years, I can't say I'm surprised that this is on the list of common traits. That's culturally what we're about here, but I'm definitely very curious about exactly what you mean by this. How does this manifest exactly? What are some examples of how great traders work on improving themselves?
Yeah, I think it's the point that everyone understands. It's pretty simple. It's just like there's a lot you can do to improve yourself. So I'm also curious to hear what Brett has to say about this.
What exactly do they do to improve?
Well, the basic reality, as you know, Seth, is that markets are ever changing. We go through periods where markets are trending and periods where they are range bound, where they are more volatile, less volatile. In some markets, we see correlations among assets. In other markets, those break down. And so any one approach to trading tends to have a shelf life in terms of its quote unquote edge. And so to have a successful career as a portfolio manager, an investor, as a trader, you need to be evolving with markets. You need to be finding ever new sources of edge. And so there's always research and development going on. Sometimes beginning traders hope that they find a holy grail. They look for what they call quote unquote setups that are chart patterns that will lead them to success if they're implemented. Well,
that is very true, by the way. That is what a lot of people are looking for, especially here on YouTube. A lot of people who comment on my videos, that's what they're looking for. And it's just not what trading is about. There's a lot more to it. And even if you found a good setup in a book or something, it might be out of date and not working in a couple of years. So you want to focus on principles that stay in the market, that are there long term, like the principles that will always be there, like price action, but not just that, because price action can change and adapt, and sometimes in some markets it's different, it's acting differently sometimes. So it's just about kind of refining, see if something doesn't work right now, find out why, and find out how you can avoid this, and only trade that thing when the market is working for it. Again, good advice.
There are plenty of algorithmic participants who could automate that trade and profit from it continuously. But in fact, that doesn't happen, and that's not what algorithmic traders do. The advantage we would find in one market, let's say a breakout pattern, won't work in a different kind of market. And so we always need to be adapting to market conditions, and that takes an unusual amount of open-mindedness and flexibility.
I was going to say, it sounds like it's a person who doesn't get too attached to any one discipline, but has a sort of fluidity to be able to move into other disciplines to continue to succeed in the market.
Yes, and again, we see this in the business world. So right now, a particular product may be popular, but consumer tastes change, technology change. So at one time, flip phones were the rage. And then all of a sudden we have these smartphones and no one wants a flip phone. We have to adapt to new technology, we adapt to new markets, and that's what makes for ongoing success.
Yeah, you see this a lot with the business where a lot of companies like Blockbuster, who were selling or renting movies before, go out of business because things changed and then the movies are all online on Netflix. They didn't adapt in time for it, and that's a big issue. So the more you're able to understand what's happening and also kind of talk to other traders, see how they do things, what they've noticed in the market, the more you're able to adapt. Recently, it's like Forex. It's like really slow now, but crypto is booming. So if you want to stay in Forex, you can stay in Forex. That's all good. But you're not going to get the best results that you can get. And you probably have to take a cut in your profits. But if you go into cryptos, you start to learn that market more, see how things are moving there, see what's evolving. Then you can start to learn. And then you can start to implement it better and get better profits. So that's a good point. And it's not that you'll change your whole style like every week or every month or every quarter or every year. It's not just about that. Your style might stay the same. It might stay very similar. But the markets you go in, the tweaks you'll make to make it better in different markets, that's what will change over time. That's what you want to pay attention to. So that's really good advice. And I think not many people understand it and really implement it in their trading. So this was a really good video. Really glad I listened to it. Really glad you guys are here also. And if Brett is watching this, I've been trying to interview Brett for a while on the channel here, so we couldn't make it work yet. But if Brett is watching this, I would really appreciate his time and an interview on the channel here. So definitely reach out. Dr. Brett, if you're watching this, I would really appreciate your time and having your advice for my listeners. Hope you guys like this kind of video. This was the first time I tried a reaction video like this, so let me know your thoughts in the comment section as always. I want to hear what you think, if you like it, if you didn't like it, or for whatever reason, let me know as always. I want to hear your thoughts below. Definitely check out the SMB Capital channel. They do a really good job to talk with traders, with psychologists, show what their platform is about, and all these things. Check it out. I'll leave a link below as always. Or here's some more, subscribe. And I'll catch you back here in the next video pretty soon.